Taking a look at the energy markets today, I want to focus on WTI. WTI, another rally again today. We saw reestablishment of the uptrend as we see WTI continuing to benefit from some of the news items hitting the market the last 24 to 48 hours. And when you look at the WTI space, as I mentioned, we reestablished this uptrend. We saw a little damage threatening to break the current uptrend when we saw it down and around the 55 half level, but now it's firmly reestablishing its uptrend and really going to new highs from those October lows that we saw. So currently the contract right around the 59.22 level, so back over $59 a barrel. When you look at the items that were driving the market today, I think you got to point at certainly the OPEC Plus meeting, news coming out of there that they're going to continue to reduce production, and it looks like they had a cohesive message coming out of that. And I think earlier in the week, that was why we saw crude coming under some selling pressure, particularly a week ago today when we saw it down quite significantly, because it didn't appear that there was a cohesive message going into this meeting. But now that the meeting has passed, it does appear that they're on the same page. We had a successful IPO as well, it appears, from the Saudi Aramco IPO yesterday. So all those things are playing into, I think, the themes in the oil market. And let's not forget, the U.S. data this morning certainly helped pick up the pace as well. The U.S. jobs data much stronger than expected. We saw a very positive rally in the equity markets. We saw, again, some rotation here out of the metals markets and out of some of the more risk-adverse type of area into the more risk centric areas or more aggressive areas, as you would view them. And that's certainly, when you look at the crude space and the equity markets, they're benefiting from the idea that maybe the U.S. is going to continue to move forward into 2020. So you're seeing a nice positive reaction there. Looking at some of the other dynamics, I want to point out that we had several news items this week that I think also reinforced this message. And certainly initially were the inventory numbers. Both the API and the EIA numbers were, we saw reduction in inventories. That was reversing the most recent trend for the last month. Also, Bloomberg came out with a report this week and indicated that Tanker Tracker, basically they track tankers in the Middle East, were running at the low end of the range. You're seeing shipments reduced to July levels. So again, you're seeing that production cuts actually being realized in the market. At least it appears as such by Bloomberg measuring the Tanker Tracker type of mechanisms within the Middle East. Also, I want to point out that rig counts today. We did have the Baker Hughes rig count, another reduction. So there we got 14 out of the last 16 weeks. We've seen rig counts reduced, and now you're looking at rig counts below 800 for the first time since March of 2017. So we continue to see rig counts reduced here in the United States. Now, again, efficiencies have picked up, so I'm not so sure that that's going to have a huge impact on supply, but there's no question that you're seeing a trend develop there where we're seeing rig counts continuing to come offline, and I think that's another reason why we're seeing, again, the strength in the WTI space as we close out the week.